This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we're going to talk about a cybersecurity policy and why, if there's no financial loss to the insured, there can be no coverage, and why there must be a financial loss for an insured to recover on a cybersecurity policy if he or she or it is not actually a victim of the crime. After suffering from a phishing scam, Door Systems Incorporated, the appellant, sought coverage under a cybersecurity insurance policy it obtained from CFC Underwriting Limited, Underwriters at Lloyd's, London, and Evolve Cyber Insurance Services, LLC. The parties disputed the scope of coverage, and the appellant filed a lawsuit against the respondents, alleging, among others, breach of contract and bad faith. The trial court sustained a demurrer, concluding that the second amended complaint, the SAC, did not plead a direct financial loss sustained by the appellant. In Door Systems, Inc. versus CFC Underwriting et al., the California Court of Appeals on June 3, 2024, resolved the dispute between the parties. Because of the facts that started with a May 3, 2021 claim of the appellant, a leading distributor of integrated fire doors and fire protection smoke curtains, filed a lawsuit against the cybersecurity insurers, alleging causes of action for breach of contract, breach of the covenant of good faith and fair dealing, and declaratory relief duty to indemnify. The trial court sustained the demurrer without leave to amend. The complaint alleged that on January 20, 2021, someone impersonated appellant's president and sent electronic correspondence to one of appellant's clients, X-Act Finish and Trim Incorporated. At the time, X-Act owed appellant at least $395,000 for products ordered from it. The impersonator demanded $395,000 and provided wire directions for payment. X-Act complied, but was later informed by the appellant that the money had not been deposited into its account. Subsequently, appellant and X-Act conducted an investigation and were able to recover $160,419.20 of the $395,000 fraudulent payment, leaving a balance of $234,580 that appellant sought to recover from its insurers. The trial court sustained the demurrer to the second amended complaint without leave to amend, ruling that the SAC failed to state facts sufficient to constitute a claim. The plaintiff failed to allege a loss sustained by the appellant. Instead, appellant alleged X-Act paid the fraudster. The allegations that the appellant cannot collect the funds from X-Act because of UCC's imposter rule was determined to be unfounded because a wire transfer is a payment order, and thus the imposter rule did not apply. The imposter rule would not prevent the appellant from recovering the lost funds from X-Act. When the imposter later demanded payment of the invoiced amount, X-Act wired the monies into an account not controlled by the appellant. Appellant and X-Act later recovered some of the money, and even if the transferred funds were specifically earmarked to pay X-Act's debt to the appellant, Because money is fungible, XX still has an obligation to pay its remaining debt to the appellant. The Court of Appeals concluded that the appellant did not suffer a direct financial loss from this phishing scam because without a direct financial loss, coverage is not triggered. Thus, the trial court properly sustained the demurrer to the first cause of action for breach of contract. Without a breach of contract, there is no breach of the covenant of good faith and fair dealing, and the trial court properly sustained the demurrer to the second cause of action. The judgment was affirmed by the Court of Appeal and even gave the respondents the costs they incurred on appeal. In my opinion, an insurance policy, like the cybersecurity policy involved here, promises to indemnify the insured in case of an insured against loss. Since only XX suffered a loss by paying the phisher and sent money it owed to the appellant to a criminal, the appellant incurred no loss, and it can still collect what it is owed from XX, who did not apparently have a cybersecurity policy. This video was adapted from my blog, Zelma on Insurance, which is available free to anyone who clicks on the URL zelma.com/blog. You can subscribe to the blog and you will receive a notice of every blog posting, usually 5 or 6 a week. And you'll also receive access to the more than 4,800 blog postings. You can also subscribe to the videos on YouTube and rumble.com. And if you do, I'd appreciate it if you click on the like button on YouTube and the thumbs up button on rumble.com. And if you're interested in further detail about insurance, insurance claims, insurance law, and insurance fraud, please consider, for a very small fee, subscribing to my Substack publication. Thank you.